I don't know what you see. Well, actually, I kind of do because I can check it out on YouTube, but then it just weirds me out a bit because I'm looking at myself. But if you can hear me, if you can see me, welcome to Selfwealth Live. Say g'day in the live chat. I can see a couple of you have already done that, which is fantastic. Welcome to Wednesday night hump day, end of reporting season, which is always a bit of fun. I kind of made this joke on a video that I put out on Selfwealth that this time of the year is kind of like when you get the reports, if you're a teacher, of all the students who handed in their work on the very last night before the assignment was due, all those students that crammed and got their assignments in at the last minute just because they had to. And, you know, this week in particular, since Monday through to now, is a really interesting time because you get to see all of the companies that are just trying to air some dirty laundry. So I've got a couple of those tonight. I'm going to go through two of them that are a bit on the nose, shall we say, and then I've got 5 reports from companies that were really interesting as well that I'm sure you know. It's good that everyone can hear us. I hope you enjoy tonight's joke. It's coming from Rob, who is, of course, joining me behind the keyboard inside Selfwealth Live there. If you do see the moniker Selfwealth inside the live chat, that's either one of us, so it's a lucky guess who it is. Special shout out to anyone who created a Selfwealth account, a free Selfwealth account, I might add. Remember, it doesn't cost you anything to create an account. Using the special link that Rob, I hope, will drop into the chat. This link, if you sign up to Selfwealth, you get 10 free trades. You get access to all beginner Rask courses for free. And you go in the draw if you join before the end of tonight. So before the end of August, you go in the draw to win $1,000 in your brokerage account, which is pretty good. So pocket full of shell. You're right. It better be a good joke from Rob tonight. I've even got a visual that I've put together, and my co-host on the Australian Finance podcast happened to glance at my creation today, and she just looked at me and just gave me this blank kind of vanilla look, and then just shook her head. So hopefully you get to see some of my creative talents on display. Oh, there we go. So Rob's dropped the link in the live chat there for anyone watching. You can click that link. You can sign up to Selfwealth, get 10 free trades, and go in the draw to win some cash. Who doesn't love that? G'day, RL. Good day to you. Mark, Alfie, great to have you with us this evening. Chris, Toma, Roger, good to have you. I know we've had a few chats on Twitter. Don't forget, you can find us #SelfwealthLive wherever you get your social media. So I'm going to share my screen really quickly. Just here in the Selfwealth platform, you can see I'm in the low tofu account. We've got the share market today. What's it done today? Looks like it's ended up slightly below parity, slightly below where it opened. Now, I probably check what the market is doing. If it wasn't for Selfwealth Live, I probably check what the market is doing on a daily basis, probably never. I actually don't pay any attention whatsoever to the daily price movements of the market. Occasionally I look at my ETFs, which track the market, and that's about it. So also just one final thing. Cameron, you've said same look my teenage daughter give me, Owen. Yeah, that's right. When you do something, you're like, this is almost like a dad joke. When you do something, you're really proud, and they just look at you like, this isn't great. But anyway, so as always, let's get into it. We're going to do a giveaway of some value investor program places to anyone. I think we had 3 winners last week who guessed the most bought share and the most sold share inside Selfwealth over the past week. We gave away 3 value investor program places. That's worth, based on the price that we sell it at $4.99, around $1,500. And for those winners, also got free trading inside of Selfwealth for a certain number of trades. So if you guess the most bought and the most sold, that'll be on display tonight. One final thing before I get into the companies, which is the part where what we all love, just remember that any of the information I deliver tonight is limited to general financial advice only, of course. I don't know your personal circumstances. So even if I answer a question, an investing question, I'm going to keep it general, and it's important that you seek professional advice. someone who can give you advice on your personal circumstances. So get your guesses in. The most bought and the most sold. We'll go through the top 5. I've got them on my phone over here. And yes, I am recording in a different location. I'm actually one room away from the studio that we have here. I'm not in a cave or somewhere underground or in a mine. This is just one of the meeting rooms that we have here. And so I want to also just quickly, just before we get into it, just issue a bit of housekeeping. I have reached out to Pilbara Minerals or Pilbara Minerals. I've reached out to Core Lithium, and I've reached out to the team at ETF Securities to hopefully get them on the show. This is all TBC, to be confirmed, to hopefully get them on the show to talk to us about lithium. So hopefully we can get a star-studded lineup of lithium experts on the program to talk to us directly about everything lithium related, everything that's going on inside the lithium industry right now in Australia and broadly. So Eve, good question from you. Are ETFs included in this week's top 5 most bought and top 5 most sold? No. I can tell you for certain that VAS, the Vanguard Australian Shares ETF, was number 1 most bought by, it went VAS, then it went the outer atmosphere, then it went the inner atmosphere, then it went everything else. And it was a lot of people buying VAS over the past week. So let's exclude that. Raymond, go lithium from Facebook. Raymond, I know you were keen on this one. So yeah, hopefully we can secure some of the guests. So just stocks tonight. That's right, Jake, just stocks tonight. Thank you to everyone who has got your guesses in already. I'm going to bring up my list and we're going to start going through these. Vaughan, you've guessed most sold Pilbara Minerals, most bought BHP. Interesting. That's all I'll say. Interesting. As I get up my list. Okay, here we go. And I'm going to share my screen as always. And then we're going to talk tonight about about Atomos, which is a small cap company I've mentioned on the show once before. So tonight, I'll just give you a quick rundown. We're going to talk about Atomos. We are going to talk about A2 Milk, this one, which I know many of you own. We're going to talk about Fortescue, one of the most popular companies on the ASX. We're going to talk about Alcidion, which is the company that Andrew Page brought up not too long ago on the show. And there's one more that I cannot remember. And you know what I've done? I've actually forgot the joke. So not only have I forgot number 5, RPMGlobal, how could I forget? RPMGlobal, the mining software company. So all of these companies we'll talk to tonight, and we'll also talk to a few shockers that have come out over the past week. But the joke comes from Rob. And this is, Evie, we haven't done Fortescue yet. That'll be in a minute. But this is the joke. This is Rob's joke. How could I forget? Such a fantastic joke. Why does Warren Buffett always get tummy aches watching horror movies at the cinema? Because he's greedy when others are fearful. So that is Rob's very first joke on Selfwealth Live. He's promised us, he's talked a big game, I might say. He's talked a big game about the best investing jokes. And here it is, a Warren Buffett investing joke, straight from the top, straight from Rob to you. So I think that's pretty good. Out of 10, what would you rate Rob's joke while you're getting your guesses in? So I can see, Jake, you've asked, can you please talk about Horizon one day, please? I'm not sure if it was you, Jake, that asked me on Twitter. I actually covered that on the Australian Investors podcast about 2 weeks ago. So if you go back in the archives, you'll see that there. Jake's given you a 10, Rob, an 8, sorry, out of 10. Eve's given you a 10. Raptor's given you a 10 out of 10. Terrible, says Danica. Terrible. Are you saying terrible about the artwork or about the joke? Okay, so Rocky, you said, hey, can you please talk about Aussie broadband price drop yesterday? I haven't actually looked at it, Rocky, but I can put it on the list because Aussie broadband is a fan favorite. Not bad, Rob, says Cameron. Gives him a 6 out of 10. Few 10s in there, just saying, says Rob. Okay, let's get into it. Top 5 most bought, top 5 most sold. Let's crack on. So I'll start with the most bought because why don't? We're optimists. In at number 5, an interesting one is Flight Centre. Obviously, Australia's largest omni-channel travel agent, both bricks and mortar and online. You can see the share price was cratered after COVID. No surprises there. In at number 5 on the list. In at number 4, and this was interesting because I think it's only appeared a few times in our list, Macquarie in at number 4 on the most bought list. You can see that right here. It's had a tremendous run. I think Macquarie has reported a profit for every one of the past 53 years. So that's That's a big one. In at number 3, we've got Lake Resources. So maybe we can also speak to someone from Lake Resources. That would be wonderful if we can get them on the show. So Lake Resources up 4.4% today, a regular feature in this list. And I'll give you a hint, it appears in both lists. In at number 2 for the most bought list, Pilbara Minerals or Pilbara Minerals. I've got to get this out of my system. Everyone from WA is going to reach through the camera and through the screen and throttle me a bit for saying this so wrong all the time. So Rob and I were practicing our pronunciation before the live show tonight as well. Pilbara. I think I got that right. Okay. In at number 1, and I saw a few guesses for this. In at number 1 is BHP. BHP obviously splitting off its oil and gas this year. We've talked about it. I think we talked about it last week. Pretty strong result from the mining giant. Also in a bid to try and buy Oz Minerals. I can see, Tom, you've guessed PBH, and you've guessed sold BPH. I don't know if that's a tongue twister or what, but interesting picks there. Really interesting picks. Okay, so that's the top 5 most bought list. Let's start from 5. Flight Centre, Macquarie, Lake Resources, Pilbara Minerals, BHP. Let's go to the sold list, and I'll be quick. BPH. BPH Energy. I had to look up this company today. Hopefully, Tom, maybe you can just share a quick little bio of what it does if you know a bit about it. I didn't know really anything about it until I looked at it today. We can see in at number 5 on the most sold list, only 2.4 cents, I might add. Qantas in at number 4. So this was on the most sold list, whereas Flight Centre was on the most bought. In at number 3, we've got a company we're going to spend a bit of time talking about tonight, which is Fortescue Metals Group. Right there, we can see it. Number 2 on the sold list is Lake Resources, and I think there may have been one guess for this next one, which is Pilbara Minerals in at number 1 on the most sold list. So for the most bought, we've got BHP, most sold, Pilbara Minerals. Rebecca said BHP with a low dividend yield. Yeah, well, the trailing dividend yield was quite big, but the forward dividend yield might not be so high. I'm so glad you've corrected your pronunciation of Pilbara. Has been irking me for months, says Eve. And Stuart says he agrees. Well, thank you, guys. I think that's a backhanded compliment. I've got there. I've got there. Thank you for all of your support during this transition. It's been wonderful. Okay, yeah. So, Cameron, I will just jump over to ABB, aka Aussie Broadband. I did not know that it had fallen so substantially. So I'm guessing results are out. Let's have a quick look. I don't follow Aussie Broadband as closely as I used to. So let's have a quick look here. For your results, I just signed up to Aussie Broadband. So hopefully they're actually going to still be providing a good service going forward. You can see revenue up 56%, operating profit or EBITDA before transaction costs 107%. And let's have a quick look down. I think the big thing with companies like this, and I don't know much about it, I can take a look at it ahead of next week, is just knowing if these companies meet expectations. And at the end of the day, it's all about expectations. So we'll just have a quick look here. We've got analyst expectations for 2023, 822 million, 2024, 950. If we go back to the announcements page, we can see a news snippet of here. It says between 800 and 840. So, still strong growth, but probably not what analysts were expecting. And I can see why sell Fortescue days before, 15% dividend yield of $1.21. Okay, let's jump into it because I've delayed a bit tonight. So I want to start with A2 Milk, and hopefully y'all can see this. I'm actually going to, I don't know if I've showed this chart here before, if it was in the Investors podcast, but I'm going to increase this chart in just a moment. So A2 Milk, you probably know A2 Milk. I've got it in my fridge at home. A2 Milk is the company that creates dairy products out of the A2 only protein. And this is a type of protein that occurs in some cows. And this milk is supposedly in this protein, avoids A1 protein and is supposed to support tummy health or gut health. People that have sensitivities to some dairy products can actually have A2 milk and be fine. But the real crown, jewel in the crown of A2 Milk is actually its Chinese business. So the Chinese business is where A2 has experienced some growth in times gone by, but it's also where the business has really pushed its infant formula. Now I'm going to increase this chart just really quickly, and I'm going to show you something. So here we go. So this chart here basically shows you how A2 Milk accesses the Chinese market. And this was done by a Rask writer and contributor, Lachlan Burr-Jensen, who you can find him on Twitter. And he currently based in Asia. He got some translation done and tried to understand how A2 Milk fits in to all of the different parts of the Chinese ecosystem, if you like. So here we can see A2 Milk. A2 Milk creating its infant formula and its milk products and dairy products. And you can see, so here we've got a deal with Fonterra, which is the big farmers cooperative, and we've got Synlait Milk to create milk and dairy and infant formula products, right? But they've got this strategic export/import, agreement with China State Farm Holdings. And we can see how all of these different businesses are intertwined, right? So here we can see A2 Milk, it owns part of Synlait Milk, which is partly owned by Bright Dairy Holding Limited, which is partly owned by the parent company, which is partly owned by the Shanghai government, which is is fully owned by the Chinese political party, right? And so we can see how all of this is basically like A2 Milk finds itself right smack bang in the middle of this really complex and commonality in shareholders throughout all of the different organizations. And a few years ago, you might remember when Australia had the trade war with China, A2 Milk, being this purple dot right here, was caught right in the middle of the trade war. And so that's why A2 Milk's profitability, and we can see the stock price, if I bring it up just here, it just flopped. It just like cratered again. So let's have a quick look at the share price here inside Selfwealth. So we can see it fell from a high of around $19.80 to a low of around $4. So that's down 70%. Jeremy, good evening, mate. Welcome. You haven't really missed that much. We had Rob's joke, which was probably the number one thing. It's probably the highlight of Selfwealth Live in 2022, actually, which is quite good. But other than that, you haven't missed much, mate. So welcome to the show. And so back to A2 Milk, it's caught right here in the middle. And what's happened recently, and I'll summarize what all this kind of flowchart means for you in just a second, is recently A2 Milk bought this company called Matura Valley, which is a manufacturing facility. And they bought the 75% of it. And they bought it from the China Animal Husbandry Group, which happens to be owned by this group, which is also the company that controls the licensing and also the sales of A2 Milk into China. So basically, the way it works is everything that surrounds A2 Milk in its Chinese business is controlled by people other than A2 Milk. And the idea here is that if you're banking on A2 Milk, I think, in my opinion, if you're banking on A2 Milk growing in China, you have to basically admit that the business has no power over some of these partners. And so I think this is something that I kind of get a bit, I guess, you guys were irked by me saying Pilbara instead of Pilbara. I think that when I see a company like this, that is dependent on so many parties outside of this, and Anthony, you've just said it, you just asked a question. Are we putting too much emphasis on China here? And I think what we have to be realistic about is that A2 Milk is caught in the middle of all of this. And at the end of the day, it has to make sure that all of the agreements and all of the palms are greased, so to speak, if you catch my drift. And at the end of the day, I probably would just make sure that you understand that there are, risks involved with a company like this. So in the past, we thought, it was all roses. And to an extent, A2 Milk is a brilliant business. I don't want to take necessarily much away. I just want to be realistic about it. So if we look at sales revenue, if we just go to the results recently, 1.4 billion, up 20%. If you exclude the acquisition of Matura Valley, it's up 11%. 25% sales growth in China and Asia, backwards in Australia, and the USA business is still quite small, with $82 million of revenue and a $36 million loss. On the profit line, we can see it made $123 million profit. I'm taking the profit line that excludes the China husbandry shareholding. It's had a big expansion in revenue with a pretty meaningful increase in marketing costs, but the increase in revenue exceeded the costs. Dividends, it's not paying a dividend at this time. It's choosing to keep its dry powder, so to speak, pun intended. It's got $816 million of net cash. So it's got some shareholder loans. So there are some loans, which is interesting in itself. There are some loans from A2 Milk through to this company right here, which is, and that company also happens to be one of the minority shareholders or one of the minority beneficiaries. So it's got some shareholder loans, but for the most part, it's got a lot of cash. In terms of the outlook, it was pretty positive, to be honest. They're saying that they expect to grow again in high single digits, and they expect to improve margins. And I can see, Andrew, you've just brought up something which is probably the most prescient thing of all. You've said, I recall last year you had a bet on your podcast with Dr. Anirban Mohanty about who would be bought out first, A2 Milk or Treasury Wines. Do you have any thoughts now? Well, Andrew, you might remember last week on Selfwealth Live, we talked about Treasury Wines, and I said how the Penfolds business is actually a really good brand. And the bet, just so we all know, the bet was with Dr. Anirban Mohanty, who's appeared on Selfwealth Live too, that if Treasury Wines gets bought out, he would buy me a bottle of Penfolds. And I believe he said that if A2 Milk gets bought out, I would buy him a bottle of A2 Milk, which I think is kind of in my favor, to be honest, because a bottle of Penfolds, I can't afford a bottle of Penfolds. So I'm pretty sure I would be the winner in that situation. So I can see a lot of great questions here. And there was a point made earlier by, I can't remember, where was this? Basically that the company has a wonderful brand. It's got a wonderful business, and I think investors are willing to pay up for it. If we look at forecasts, I just want to caution you, a lot of people really got ahead of ourselves, suggesting that, the company was a gateway to China and all this sort of stuff. I just want to be realistic. I think the trade war kind of brought that up for us. Rebecca, you said, what kind of company has zero debt and $900 million of cash on hand? A2 Milk, and that's the one I was looking for. And yeah, so at the end of the day, it does have a pretty strong balance sheet, right? And the interesting thing, Rebecca, that I'll just call out is if we come back to this chart. So I said that A2 Milk basically relies on these two organizations right here to sell into China, right? Well, the agreement with these companies actually comes up for renewal this year. So if we go, you can actually see all this because it is actually disclosed. And if I go to the annual report, I'll just get up the price sensitive announcements and I'll bring up the annual report. Where are we? Annual report's not being shown here. I'll see if it's in here. It's not in here. Let's get rid of that. Let's go like this. And I'll see if I can find it, because the annual report does show us, where am I? I might, the annual, I'll spare us all the details of me trying to find this thing and flip-flop around, but the annual report shows us that all of the connections between those related parties, or at least some of them. And so one of the most integral agreements for A2 Milk actually comes up for renewal this year. So obviously shareholders are banking on that going through and it being renewed, because A2 Milk makes a big chunk of its revenue in China. So yeah, Jeremy, you said you've got a question. Please send them through. Roger, you've asked, is A2 any more beholden to China than Aussie iron ore miners? And the answer is probably not, Roger. Probably the only thing that I'd mention there is that iron ore is a very, very important commodity in China. And basically, where else do you get it from? You can get it from South America with Vale, but that has its own issues. And that's why iron ore prices went up, by the way. And you'll notice that maybe iron ore wasn't was the only thing that wasn't touched during the trade war with China. Whereas, A2 milk, there are plenty of replacements for that. And it's quite a political thing as well in terms of buying local in China. So yeah, I think, okay, so there's been so many good comments coming through here. Titus, I could have missed you saying this, but the trade issues with China didn't seem to have impacted A2 milk sales in China. Yeah, so if we bring up, I don't actually have the annual report in front of me right now, but if we bring it up, we can see that it kind of slowed the growth, and the inventory and supply chains and the Daigou channel was a big one, Titus. So A2 milk, for those, they call it the suitcase trade, for those of you that don't know. This is basically where you get an Australian product, and you, as a consumer, you buy it from Chemist Warehouse or whatever, and you ship it direct to China. And it's called the Daigou channel. It's called the suitcase trade or the grey market. And you might remember a few years ago, there was heaps of politics around this. That basically disappeared. And at the time, A2 Milk's management team basically said, we don't know exactly how much of our Australian sales are actually Chinese sales. So yeah, I think that's, Jason said, how many cans of formula can you fit in a suitcase? I think if I'd be more optimistic about A2, I would say that they've done a pretty good job of kind of fixing all of their inventory issues. There was a buildup of inventory of extra tins of infant formula, and that's all solved. So I guess at the end of the day, would I buy A2 milk? And at the end of the day, I think I would probably have it as a small position in a portfolio. I'd just be realistic that it just has some risk, but I'd have it as a small position because it is a growing brand. It is positive, and as Rebecca says, USA sales are growing, and that is still a very small part of the business, but it's a possibility that it does pretty well over there. Rebecca, you said A2 milk relies on shipping and air freight, which was disrupted by COVID lockdowns. All good now for stronger sales growth. Yeah, great. And that's the thing. Like, also the issues like with trade and everything have transitioned, and the company is focusing on Chinese label products in China, which is a good move as well. So I guess the key point here is that a lot of the negatives are behind it. It's just being aware of those risks. So Virtuoso, you've said, did A2 Milk solve the class action against it after projecting growth? Directors sold out and let the shareholders to hang dry. Yeah, I don't know the answer to that, Virtuoso, but what I would say is that I would say that A2 Milk has had some pretty poor choices in terms of management over the past few years. Former management was paid an exorbitant amount of money, and really at the expense of shareholders. So hopefully that's okay. Jeremy said, one of my few, the forthcoming pun, is KSS. They just released a response letter which impacted their price. In your opinion, was it sentiment that led to the price change from the letter? KSS, says Jeremy, I don't know this business. So Kelios Space, is this the business that I should be looking at, Jeremy? Market cap of $58 million. When you're down this end of the town, when you're down at the small cap end of town, Jeremy, anything can basically impact a business's stock price, whether it's a letter, whether it's even just a news article, something like this. So let's have a quick look here. It's interesting because at this time of the year, you get a lot of companies coming out and issuing announcements to say that they haven't done something, like they haven't got audited accounts or something like this. Okay, so I don't have enough knowledge on this company right now. Revenue risk. The company notes that there is no existing customer contracts that are dependent on the first cluster of satellites commissioned, nor is the company's ability to provide these services depending on the functioning of this cluster. All I would say, Jeremy, and this is strictly not personal advice, is I've been in situations where I've invested in companies, really small speculative companies, and I've invested too much, and I regret that. I would just say, I don't know much about it, so I can't comment on the company. Sorry, mate, but I can maybe look into it if enough of our community want me to. It's just one of those small businesses that is very speculative by the looks of it. So just be mindful of your position sizing, and also feel free to jump on the phone and call management. If they're a good management team, they should pick up your call and they should answer. So, okay. So BB said, I don't know if you have your answer because my chat is not updating, but money will sit in the account. Okay, so that's something totally different. Rebecca, you said disappointed A2 Milk did not do a dividend. And Rebecca, that could be because they're looking to make acquisitions. It could be because they're waiting. They want to keep their balance sheet stronger for any type of developments that may come through. Okay, so the next company on my list is actually a company that I've followed for many, 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 many years. It was one of my first ever recommendations as an analyst. And it's a company called RPMGlobal. It does mining software. So I'll bring up this image like I did for A2 Milk. And we can see here all of the different customers. These are not just customers that use its product. These are customers who took on new products in the 2022 year. So here we can see across all of the different software that RPM provides, and that's this blue font here. We've got design and scheduling, operations, asset maintenance, finance, simulation, and optimization. You see all the big mining companies, whoops. And basically what RPMGlobal does is it provides software to mining companies. So let's jump in and let's have a quick look at the company. So the ticker code, by the way, is RUL. I've brought this up on the show before. So RUL, you will remember me emphasizing this because some people get mistaken and think it's RPM as the ticker code. It is not, it is RUL. We can see the share price has fallen down recently. We can see it came out with news. And I will just have a quick look at the presentation, the investor presentation, which I was reading again today. So I'll just bring this up right here. And again, we can see all of the major customers across the different product groups. And I'm going to call out something which is further down, which is over time, the company since 2012 has been investing, and it's invested over $170 million in research and development to improve its software. And it's taken its software from a once-off thing right up to something that people can buy on subscription or customers can buy on subscription. And we can see what's changed here. So a perpetual license is just like a one-off sale of a piece of software, whereas subscriptions is ongoing, obviously. And so we can see here on the right of the chart, we can see overall as a percentage of all sales of software, we can see that the subscriptions have increased. And you might be saying, well, why does that matter? Why does it matter that it sells subscriptions? Well, subscriptions are actually a much, much better way to sell software because what actually happens is over time, you can improve the software and you can increase prices immediately. And then over time, and they're not fully there yet, but once they get to software as a service or SaaS, if you've seen that around, they're able to do everything and update software and increase prices instantaneously. Obviously, that give their coders and what have you, but it's a really important step for the company. So RPMGlobal has actually done a fantastic job of moving its business away from the old school kind of advisory business where it would just consult on mines and mergers and acquisitions, and actually into software. And so the business was started in the 1970s. It was formerly known as Runge Pinnock Monaco, and it was rebadged as RPMGlobal not too long ago. So sales revenue was up 20%. Contributing to that was the software division, which was up 14%, as well as the shift to subscriptions, which I just talked about. The mining advisory business reported growth of 48%, and they say that they've got 6 months of revenue or work already banked. So for the new year. Profit, it actually reported a loss of $4 million, but that was a slight improvement. They had a very strong profit contribution from their advisory business. No dividends, but they continued their share buyback, recently buying a bunch of shares at $1.60. As for the outlook, and this is where things get interesting for RPMGlobal, the company said that it actually had a very positive outlook. It said, with a rock-solid revenue foundation now in place, we expect a major revenue growth uptick and margin expansion. So the company's forecasting 20% growth in the year ahead and a 200% increase in its earnings before interest, taxes, depreciation, and amortization. So it's pronounced Runge, says Stuart. There you go. Stuart, do you use RPMGlobal software? I would love to know what you think. MD Kabir, you've asked, what is the competitive advantage of RPMGlobal? Well, it's not so much a competitive advantage. One of the things that it will do, once it moves to a SaaS subscription model, it's all fully cloud at the moment, it's software, MD, but once the software is in a SaaS model, it will be, I think, the world's first. What tends to happen with these companies? So There are two sides to the business. There's the side which is like the advisory and consulting side. So this would be like, if you owned a mine, tell me where to build, tell me where to dig, how do we optimize this, so on and so forth. And then there's the software side, which is what we can see in front of us right here. Now, that type of, I guess, business model has its disadvantages. The advisory business is quite a cyclical business. It goes up, it goes down, depending on the mining cycle. But the thing that happens is the advisory side of the business is actually a great foot in the door. So it's actually a great foot in the door to win new customers. So they might come in for consulting, but then they actually get the software. So that's one of the key things here. So we'll have a look and we'll see if we've got a video. Sometimes they show these videos, and I'll make sure that no one can hear this, but we'll see if I've got a proper video which shows the software. I can see, Stuart, you've replied and you've said they have good software and some very clever people. Well, that's a pretty strong endorsement, Stuart. And so basically you can imagine these big, let's call them Tonka trucks, because that's how some of us may remember them. You can see here that the software is designed to optimize a plant. It's designed to optimize where you drive, how you drive, and play into the automation of mines. And so the reality is, for RPM Global, it's in a growth market. And once the software is installed, MD, specifically to your question about competitive advantage, I think that's when we'll see the revenue growth and we'll see the competitive advantage kick in. So, Chris, you said off topic, is the market depth buy-sell list for each stock just for Selfwealth or for the total of the stock across all platforms? That's a good question for Rob. I'm not 100% sure if he'll know that off the top of his head. But the market depth, I don't have it here in the demo account. But typically, I think when I see this, I think it's for all platforms, but I could be wrong. So that's that. Yeah, Rebecca, I would say RPM Global is one to add to the watch list. So yeah, so good to see there's no issues with the stream as well. Thanks, guys. Titus, you've asked, who are their /RPM's main competitors? How are they doing in comparison? So how are RPM doing in comparison? Well, there is one company on the ASX, which is a company called Imdex. Now, this company is quite different in what it does. People put it in the same camp, but it's actually a little bit different. So this is a company that does mining software as well, but it tends to focus on exploration and those types of things. So it's a little bit different in what it does. But there are other competitors. There are heaps of competitors in mining software and analytics. I've spoken to a few engineers and a few other industry experts who work with this software, and some of them, I've had mixed reviews. Some of them said that they don't use RPM Global software. Some of them do. There are also giants in this space. So, SAP is one of those giants, the big software provider. But what RPM Global does is, instead of saying, "Hey, get rid of SAP," what they'll do is they'll integrate with SAP software, and they'll integrate with other applications that you have, and that's all part of their play to improve interoperability. So, Stuart, you've said Imdex also has some great software and some very clever people. There you go. So there is a lot going on there. Anthony, you said, are we selling the shovel by looking at software? Well, maybe, yeah. I mean, that's the old analogy, isn't it? I guess, are we selling the picks and shovels? I think so. One of the questions that I often field is, a lot of RPM Global's business is actually with customers who are in the coal mining industry, and some people have an issue with that. Now, I actually did a survey of Rask podcast listeners and of our members, and 82% of our members said that they actually would prefer to invest in a company that makes something that is, a heavy fossil fuel industry more effective. So that's something which I keep in the back of my mind is, yes, they deal with the coal companies. They actually sold off one of their divisions called Geogas, which was directly involved in that. So Stuart said, and Imdex is increasing revenue from mining operations rather than exploration. Interesting. But their products are almost mutually exclusive to RULs. Good to know, Stuart. As a geologist, that's great to know. Thank you for sharing your wisdom with us. Rebecca, you've said, what tag do you have on RUL? I actually haven't updated my latest valuation. So Rebecca, that's something that I'm happy to take on notice, kind of like a senator or someone getting grilled by senators. I'm happy to take that one on notice. I actually don't have a price target for it, but what I would say is actually quite difficult to model right now. So we can see here, analysts probably analysts got it wrong. The company is probably going to exceed their targets going forward. But if I just do a very quick thumb suck, so a company like this that could produce $100 million of revenue, I'd think that investors could pay 3, 4, probably 4 to 5 times revenue for a business like this in a good market. So just a very rough valuation here. But if you take the $100 million that they could get in revenue going forward, and you multiply that by 4 or 5 times, you're getting a reasonable valuation of around 4 or 500 million dollars, sorry. And the current market cap is closer to 350. So that's not a scientific thing, but it gives you just a very rough estimate of how you can value a high growth business. I would say that there's still risks involved with RPM Global. For example, one of the things that's really important to keep in mind is their advisory business, which is the business that they always put at the back because it's not as important anymore. But the advisory business, you can see here, it's a business that is important to RPM. It incurs a lot of costs, and you can see them here, but it's had a really good year. So over the past year, it contributed $3.7 million to the profit and loss statement of the overall company. And so what I would say is you can see the year before it was only 0.6. This business can turn on a dime. So it may not always be as profitable it is today. So be prepared to, I guess, hold on for a bit of a roller coaster ride. Roger said, we Xers are not as coy to invest in coal and millennials seem to be. Yeah, right. So, and that's true, Roger. Like there's huge opportunities and there's a very, very, very strong argument that it pays to invest in these types of companies that are trying to do better things in harsher industries, so to speak. Harsha and Mark Quartermain, you've just said, sorry, I just joined. Have you covered Alcidion yet? No, I have not. That's coming up in just 1 minute. Jason, you said, they also may not meet that revenue target and thus valuation would fall. Yeah, so valuation could fall. Another good risk. Thanks for highlighting that, mate. I would hope that RPM Global can achieve its 20% revenue growth target. I think RPM Global, as it transitions to subscription revenue, I think it's going to become more and more valuable. You know what, I actually think, and this is just for us that are watching the call tonight, I mean, a few thousand people watch this show, but the RPM Global, I think, is still one of those businesses which could be an acquisition target. I think if it fell too far, I think a big software company globally would say, I'll take that company. Thank you very much. And so I think investors, have that kind of, this is a really high quality company is what I mean to say. And so if it got so cheap that it was too cheap, I think investors don't be surprised if the company gets an acquisition offer or something like that, because it's a very impressive business. It's got a really good management team and great software. So that's RPM Global. Please remember the ticker code is R, not RPM. If you put in RPM, it goes to this. And I'm not talking about an automotive company, just so we know. Yeah, and Stuart, thank you. You brought that up. You took the words out of my mouth. For reference, Micromine sold for $900 million the other week. Yeah, so 2 of RPM Global's competitors have been acquired over the past year. And there are 2 things to take away from that. The first is that its competitors are being taken over by big global companies because those global companies recognize how important the software is. But the second thing is it actually may make RPM Global software more palatable and more stand out even more, because mining companies might not want to deal with those big global giants. So that's something to keep in mind. So let's get to so Jeremy, you said, whoa, I'm really generous with my multipliers. I treat them as a tech business and assume at least a 10x multiplier based on their potential growth. Is that way too much, Owen? I would say 10 times revenue is too much for a company that's still pretty early, Jeremy. Let So just a quick aside for those people that want to nerd out just for a second. If you have, say, revenue of $100 million and you multiplied that by 10, that would be $1 billion valuation. That might be okay 2 years ago in the United States, but nowadays, where valuations are much more realistic with higher interest rates, you have to adjust that meaningfully lower. So you might be looking at 4 to 5 times. But remember, the valuation in terms of like the multiple that we pay and other investors are willing to pay increases when the quality of a business increases. So this is a fundamental thing which a lot of people miss, which is that as the quality of a business increases, so does that multiple that people are willing to pay. And that's where you get that true growth. So you might take a lower multiple for a lower quality company, expecting that it's going to become high quality, which I think RPMGlobal will. Okay, so Raptor, you've said, what happens to our shares when a company is acquired? Well, typically one of two things, Raptor. One, if RPMGlobal was to be acquired, you would receive cash in your brokerage account or to your share registry. You would receive the cash, or you would receive shares in the new company that acquired your company. So like say, for example, when Afterpay was acquired by Block gave you some shares in Block, aka Square, which was this company. So if you had Afterpay shares, they converted into these shares, if that makes sense. Okay, so I've got to move on, otherwise I'll get in trouble for not moving on quickly enough. So Alcidion Group, I'll be quick. Small cap company, does healthcare and clinical decision making. Really promising result. This is a company that Andrew Page from Strawman brought to us on the show a few weeks back. Rebecca, you've said, thanks, Owen. I will have a punt on RPMGlobal tomorrow on Selfwealth. I would say, Rebecca, please remember that some of the companies that we talk about, like RPMGlobal, are quite high risk. And also remember that you've got to make sure that it fits within your strategy. I always find that there's no harm in waiting and just learning more about a company. For example, Rebecca, it took me I'd say about a year to get comfortable with RPMGlobal. So Alcidion, another company that I've followed for quite a few years. CEO Kate Quirk, I've interviewed a few times. It provides software to hospitals. So whereas before we're talking about software to mining companies, now we're talking about software to hospitals. Its two biggest geographies are Australia and the UK. The key point is that in the UK government, which is medical system, which is the NHS, wants 90% of the NHS trusts, which are think of them like groups of hospitals, want 90% of NHS trusts to be digital by December 2023. So right now is a time when Alcidion needs to really keep selling and growing. A poor man's pro medicus, Virtuoso says, poor man's pro medicus. So I basically think that right now it's prime time for Alcidion to keep selling its software and to keep winning bigger deals, because in 2 or 3 years, they might find it's much harder to grow. So now is the time, so to speak. Just like I said a few weeks ago for Xero, now is the time. Now is the time for Alcidion as well. That can also mean if they get it wrong, that they stuff it up. But so far, Kate's done a pretty darn good job of running the business. Alcidion, with at least one of its pieces of software, has currently 39 NHS trusts, and it hasn't just got all of them as customers by winning them. Some of them, and I can see a harsh bit of question here, jumping ahead, but any thoughts on the acquisition of Silverlink and the lack of comms regarding sizable contract wins since acquisition? Did they pay too much? I see Rebecca's comment, stock market is gambling, smiley face or laughing face. Yes, it's not gambling. We're long-term investors here, Rebecca. I know you said that in cheek. Anyway, so, and so the 39 NHS trusts, Harsha, you've touched on a really good point here, is Alcidion got them through a lot of these through acquisitions. So it wasn't just like they knocked on the door and then they got the pass. So keep that in mind. And secondly, this integrated care systems, they've won a few of them organically, but some of them have come through acquisitions, including the acquisition of Silverlink. And I think the acquisition of Silverlink was a bit different, Harsha. So The acquisition of Silverlink, let's see if it's in, I can find it quickly in the announcements here. It's not in the most recent prezzo. Okay. The original presentation, I'll see if it's here in the half year. The original presentation showed where, here it is. So let's zoom in on this, see if I can make it even bigger again, just here in the browser. So the acquisition of Silverlink basically brought this line through to Alcidion. And we'll go to the Alcidion website. So for those of you that don't know, and this is for MD Kabir, who asked the question, what does it actually do? So it sells software. They call it Maya, and it's called like the Maya platform. And it sells this software, and I'll make my screen a bit bigger so you can see it all up like this. And it's got this big platform for basically when you step foot into a hospital, MD, ironically MD, is when you step foot into a hospital and your information is recorded in the emergency room or somewhere else, it goes into Maya Precision, and that is sent throughout the hospital. You can use it to monitor vitals. You can use it for just tracking patients. And more increasingly, they're moving outside the hospital. So they're able to track patients once they leave hospital and say they go back to their home and they need remote monitoring and things like that. So that's basically it. Now, Harsha, to come back to your point before about, where are we? About the move with Silverlink. I thought the move with Silverlink was quite interesting because I think the move with Silverlink expanded the business into more comprehensive, to being a more comprehensive platform for hospitals. Whereas in the past, the business had always talked about being agnostic and kind of working with other software providers because it hasn't been able to compete with the Sabre and SAP and the big providers globally. So I think that was a quite interesting deal. And I think the price that they paid was actually not that high, to be honest with you. And I think the reason why is maybe the company wasn't growing. So Silverlink wasn't growing. And so that's why they could afford to pay the price that they did. That's kind of my insight. I don't really have any more insight beyond that, other than to say is I think it's still too early to know for sure if they paid too much. So anyway, just some quick things before we move on. Sales revenue up 33% to $34 million. Keep that figure in your head, $34 million. I'll come back to it in just a second. Recurring revenue was up 42% to $23 million. And there was a 96% increase in the total value of software sold during the year. So meaning that for all of the software that they're going to bill for in the future, they sold 96% more. The underlying EBITDA, just think of this as like the underlying profits of the business were 0.9 million, up from a loss of negative 0.4. I think it was negative 0.4. I could be mistaken there. The gross profit margin declined because one thing that Alcidion does, just for those people that are a bit confused about its software still, one thing that Alcidion does is it doesn't just sell its own software, it can also sell other software with its software. And so it has to pay for that when it does it. It doesn't have any debt. It's not paying a dividend, but it has a lot of cash. Enough cash to kind of sustain the business now that it's cash flow break even. The outlook for the business, now this is where it gets interesting, is for the next financial year, the one that we're in right now, the company has already sold $28 million that is going of revenue. So it's already going to bank this. And you can see this in the pink up here. It's already going to incur that in the next 12 months. Even if it's just stood still, from today, it just laid off all of the sales staff, it's still going to get $28 million of revenue. Now, it's also got another $2.9 million of expected renewals. So these are customers that are rolling over their contracts. They expect to win them. Now, what's interesting is the company has invested heavily in its executive team and in its sales staff. And for me, that's a pretty strong sign that Alcidion knows that it needs to move and it needs to start selling more and more and more. And I think what we're getting is we're getting a company that already has nearly as much revenue as it earned last year, already banked for the year ahead, plus the growth. So I think at the end of the day, remember that even though I speak positively of this company, it is very small And as Andrew rightly pointed out, the valuation is probably back to a price that people suggest might be fair, maybe slightly undervalued, but it's pretty fair price. Remember, it's still a $200 million company with only $30 million of revenue. So to your point before, Jeremy, if Alcidion was if the valuation was 10 times its sales revenue, which say is $30 million, that would be $300 million. And I would say that's overvalued because at the end of the day, as investors, what we're trying to do is we're trying to sell our shares to the next investor at a higher price, unless you just invest in ETFs, in which case it's just passive investing all the way, which is fantastic. But if you're trying to pick individual shares, you've got to predict that because it doesn't pay a dividend. So that's basically what you're trying to do. So overall, I think the Alcidion result is really good. I think the company's well run. I think it's got a pretty bright future. The next 2 years are really important for Alcidion to grow and start generating some profits, some real profits, not this stuff called EBITDA. Okay, so the next company, so you got MD. Why do customers want to buy from Alcidion rather than from its competitors? MD, there's actually multiple different things. And Anthony said, time to move my talking head to the top corner. Why don't I do that? I'll see if I can do that. I know I can't do that with this software. That's a shame. But I'll try and be mindful of where my head is on the talking head on the screen for you guys. So why doesn't the company? Why did people go with Alcidion? Well, to get your software into hospitals, MD, is actually incredibly tight. It's very difficult because if you think about patient records and medical information, you have to pass all of the different security protocols. You have to get verified. You have to do it in a way that's I guess, not just secure, but efficient for hospitals. It is very, very risky for a hospital to go with a new provider of software than it is to use an existing software provider and just accept the status quo. Because if your hospital can't take patients in, that's a nightmare. And it couldn't happen. It just can't happen in society. So Alcidion is over that hurdle now. They've got a reputation, and I think that's the big push from the Silverlink acquisition, is to try and say, we do more than just what you know us for. We can do this, we can do this, we can do this. And so Alcidion has established its footprint through its various acquisitions and also through its organic growth. And they're, for example, MD, they're one of only a few providers that are approved by the UK government to apply for new contracts. And so that's a big leg up as well. Harsha, you've said health is also slow moving and want to wait for others to see their success. Harsha, you've hit the nail on the head there. So there's only one industry that's slower to adopt software than mining. And I would say that's the medical industry. And that's just because of the risk involved. And both RPMGlobal for miners and Alcidion for hospitals they're both at that point where they've been adopted, and now let's see what else they can do. So Alcidion, that's that one. Let's move on. We've got Fortescue right here. You all know Fortescue because I've talked about it, and we've talked about it so many times. It operates in the Pilbara region of WA. It is one of Australia's largest iron ore miners, started by entrepreneur Andrew Twiggy Forrest. I think I did a shout out to the book. If you want to learn more about Andrew Twiggy Forrest, let me just get this up for you. So Twiggy book. This book is a fantastic read, this one right here. And it's a great book that just kind of breaks down his history and how he went about starting Fortescue. I think it's a really, really neat book. So in terms of revenue, 17.4, that should say billion, not million. It's a lot bigger than that. Down 22%. The reason why revenue was down is because the price of iron ore fell. Last year, they earned $135 per wet metric ton. This year, it's down to $99.8 per ton. So even though the iron ore shipments increased, the price that they got decreased. The cost per ton at the mine site also increased, and it's likely to increase in the year ahead. They're saying the cost will continue to go up due to wages, due to a bunch of other things like diesel prices and so on. Fortescue also has a massive focus, you could say, on green hydrogen and decarbonisation. and the business is still investing for that, as well as investing for its own purposes within its iron ore business. Profits, $6.2 billion, down 40%. Still investing in their own network, as I said. But the reason profits fell is that their revenue fell 22% on $20 billion is a lot more than 40% on whatever it was last year. So dividends, and I know this was brought up earlier on, pretty strong final dividend of $1.21 per share. That was down from last year when they paid $2.10. That was a huge dividend, also fully franked. The outlook for the business was flat production volumes and costs slightly higher. So at the end of the day, where are iron ore prices going? That's the key insight for people. According to Fortescue, based on their announcements, it seems as though the outlook is actually quite positive. A lot of miners give mixed views, but it was actually looked like it was quite positive. If I come down, and I think I've got the outlook statement in here. Let's see if it's in here. No, naturally, when I try to find it, it's not there. There is actually one chart that I wanted to show you guys, which is this one right here. So this, and if we go down, this one right here, this chart here is probably the most crucial for Fortescue. It shows how the business performs at what we call the unit level. So for every unit of iron ore that it ships, you can see the iron ore price is this kind of aqua or teal colored one here. We can see the actual price that Fortescue collects is the dark navy line. And the reason that there's a difference between the actual iron ore price and the price they receive is Fortescue's iron ore is actually lower quality than the standard iron ore. So that's what you see there. But then it also shows the profitability per ton. So we can see they made $63 of EBITDA per ton, whereas last year they made $99, which was well above average. And so ultimately, all of this outlook of we think prices might be weaker, or volumes are not going to go up, we're not going to produce more. We can see that analysts are forecasting lower revenue in the 2 years ahead, and as a result, we'll probably see dividends fall as well. So that's why people, even though they look at the dividend yield and they go, wow, that's a massive dividend yield, maybe going forward, the dividend's not as high. So MD could be, how do you value mining businesses? Yeah, you could use DCF, but you just have to be sensitive to iron ore prices. Artian says, yes. Pilbara, I've got it right. He's laughy face. Okay, I like it. Jason, you said, that's FMG looking to assure its future, and it's definitely a better angle to invest than lithium, etc. Great move by Twiggy. Hope it pans out too. Same. I hope so too, Jason. So Fortescue's push into green hydrogen is fantastic. So the next company, which is the final company, and then I'm going to get to two absolute shockers for tonight. I'm going to go from positive to absolute shockers. And I apologize for the rant that I'll go on in just about 2 minutes after I'm done with Atomos. So Atomos is the company that I brought up on the show before. Atomos does these types of devices. So it does the recorders that go along with a camera. So if you have a Sony or a Panasonic like we have, or if you have a Nikon, you could attach one of these devices right here, and it will record the footage coming from your camera in the same quality that you are capturing it, which is very rare. It's very hard to do. Not only that, more recently, the company has launched into these things with the antenna, these three things at the top here. This is part of Atomos's transformation. So it's going from just producing all of these devices that you might see on a James Bond set or with your favorite YouTuber or on Channel 7 to these are devices that can actually connect wirelessly to the internet. And so you can use this device, see this Atomos Connect here, and you can just stick it on the back of these two devices, and it can create a device that connects to the internet. So your camera can stream straight to YouTube. So I could be streaming straight to YouTube right now, as well as recording. And so that's basically what the business is and what it plans to do. So the business, however, has had a shocking one. So Anthony Vux, are they in Melbourne? Yes, they're in Melbourne. And they're also doing an investor and product demonstration later this year. So if you do know a bit about it, You might be able to go to their investor day where they actually showcase all of their products, which is pretty cool. So, yeah, Rebecca, you've said Fortescue, fully franked, 80% profit or payout. Awesome. Yeah. Jason says, I wish I bought Fortescue. So do I. I wish I bought Fortescue when it was about, 300% ago. And I remember family member backed up the truck, so to speak, on Fortescue. And at the time I was saying, listen, mate, I don't know, it's pretty risky. And he went and did it anyway. And look at him now. So he's the one who's had the last laugh there, that's for sure. So Anthony said, it sounds like Black Magic. Yeah, so Black Magic is one of their competitors, Anthony. So one of their competitors. Now, the company itself, Atomos, Atomos, I believe it's how it's correctly pronounced. It's had a tumultuous run since it listed on the stock exchange. You can see here it rose to $1.72, then fell to, 30 cents, then rose back up to $1.76, and then recently fell to 21 cents. It's been a wild ride. And throughout that whole time, I've been covering the company. I've had it as a buy or a hold or a buy, and it's been a hell of a run. In that time, they've lost their founder, and they've also lost their next CEO, who was a pretty well-credentialed CEO, and they've had to transform the business while still innovating. So you can think that, maybe I'll just turn off the screen for a second. You can think of Atomos, being at kind of like the center of where camera makers meet Silicon Valley. So they try and connect cameras to YouTube, to professional Hollywood sets, to all of that with their devices. And that's basically what they do. And so in terms of their business model, they make money in two ways. They make money from selling the physical devices, and only recently, as in the past year or so, have they started to make money from subscriptions. And so obviously you can see a similar theme with all the companies that I'm covering tonight. These companies moving towards subscriptions. It's also in my circle of competence, as you know. So being someone that's involved in technology. So we can see it trying to do that. And this, if you think about RPMGlobal started its journey towards software subscriptions around about 10 years ago. Alcidion started, 5 to 10 years ago, depending on the business that you think of. And this business is only starting it now. So it is very, very early days. And I think it might be a bit harder than what they hope. But we can see sales revenue was up 4%, but profit swung to a loss of $400,000. They sold 104,000 hardware devices and increased the range to 14 different products. So those would be, the different products that you see. Where are we? All products. These different devices that you see here. So those are the different devices. Interestingly, though, they sold 5,300 software downloads for $700,000, which is equivalent to $132 each. Now, this is interesting, and this is a very small amount of money. So in context of going from Fortescue to this company, this is a tiny company. But what is interesting about this was the company's first kind of foray into software, and they rolled out an update for their Ninja. This is their premier product right here, the Ninja and Ninja Plus. And what they did is they actually did, they offered an upgrade, a software upgrade for $99, which meant you didn't have to get a new device. And one of these devices, by the way, might cost you, I don't know, $400, $500. So they said, instead of upgrading, just pay us a license fee for software, right? And so what that meant is, instead of collecting $400 or $500 for someone buying a new device, they paid $100 and they got the software upgrade. But the key is that they didn't have any costs to do that. They can just offer the software, you pay to download it, you get it, you install it, it costs Atomos nothing. So it was really wide profit margins on that sale of software. Now, I spoke to management a few months ago, after they transitioned their CEO and brought in their CTO as CEO, who's now full-blown CEO. And I came away feeling quite positive from speaking with the company. They said they wanted to get to 170,000 Ninja devices in circulation and being actively used before they really push their software. And so the company is in a pretty prickly position. You see up here, I've said it earns a red flag. It earns a red flag for a few different reasons. One of those is the inventory that they've built up. The other thing is like the management transition. It's a business that is quite risky. And in fact, it's the riskiest of all businesses tonight that I've mentioned. So the next year will be a big challenge for Atomos. And that's why I couldn't find an orange flag, so I gave it an orange dot instead, or an amber dot, kind of like the traffic lights, red, green, amber, orange, whatever you want to call it. So it wasn't a great result, but we were expecting quite bad things anyway. So it was interesting because the company came out and showed not too long ago, and if you follow investing pretty closely, you'll see this and you'll be like, wow, your jaw will drop. So I'll see if this has got it in here. I don't think it does. This is the one. So if you look here, this actually shows you the quarterly sales. So for every 3 months over the year. And you can see here, if you just track this top line across, it went from $12.8 million in the quarter, $28 million, 3.6, then up to $37 million. So it basically made 10 times the amount of sales in quarter 4 than it did in quarter 3. And that's because they changed their marketing strategy and they tried to do a totally different thing rather than selling through through their camera partners and through their distribution centers. And it really backfired on them. It really, really, really backfired on them, and they got it wrong. And you can see that there. So overall outlook for Atomos or Atomos is actually, I would say it's more positive than it was 6 months ago, but 6 months ago it wasn't positive at all. So it's more positive now, and the business is extremely high risk. It creates a really interesting product. I was actually chatting with one of the videographers that we have here in the office, and I was saying to him, I was showing him the software, this new Atomos software where you can use the cloud to do everything you need to do, and he was just gobsmacked that you could actually do that. He works on the James Bond sets, actually, of all things. So, MD, good question. You said, why do customers buy subscriptions from Atomos? And the reason that they buy subscriptions is to access the cloud software that they're rolling out, MD. So this would be like software, you know how I said those devices can stream through to the camera or through to the internet from the device? Well, you need software to do that. So that software is where they collect that money. Minestrone tonight, says Colin. Tastes great. Well, that does sound pretty good to me. Jason, you've said revenue is very lumpy. A bit of a track record of consistency there would be good to see. Yeah, that's what they need. They need to prove out their business model. They need to prove that they can sell subscriptions. They need to prove that they can find the right price. So yeah, atonement for Atomos, Jeremy. Yes, indeed. Yes, indeed. Okay, so I'm going to get to 2 more, and I promise you I'm not going to spend long on these because I could go on forever, and I'll start with the last one first. So these are the kind of, I'll be kind and call them dogs. These are the dogs of reporting season. And so the first one is Satire, which sells luxury items secondhand. So you can see it here. There's like a luxury purse or something. And that's an example. And it looks like there's some luxury shoes and so on and so forth, maybe even the dress. And so this is a business that sells these products, and we'll bring them up here. Satire. Let's get rid of the ASX, and let's go and look at this. And we can see here a luxury online fashion emporium. So we can see all the products here for sale. You can see all the different brands like Gucci, which you might know, for example. Not something that I tend to adorn, but you can buy it if you want it. Burberry. It's all here. So this is what they do. You can see you can buy all these different things, like looks like a Flanagan for $547. This is not my cup of tea, as you can probably tell, but that's not the reason that I think it wasn't a good result. The actual reason that I think it wasn't a good result is because if you go and you look, I'll get all this crap out of the way. If you look at the actual results here, we can see from 2021 through to 2022, we can see sales revenue increased from $92 million to $209 million. You can see an increase in advertising spend. But if we look further down, right, if we look further down, we can see the gross profit. So after the costs, gross profit increased only $16 million or $15 million. There you go. But they spent so much more in advertising. So to get the extra sales, they've spent so much more in advertising and marketing. But the thing is, they're spending more just in advertising alone than they're making in gross profit. Now, you will remember back to our episode on Xero, where we talked about Xero not making a profit, but its gross profit was huge, a massive gross profit. So this, for me, this is a kind of a, I guess, for me, this is a red flag, because it basically says to me, is this business profitable? And will it be profitable in the near future if it can't be profitable right now? So that's Cettire. It's ASX ticker symbol is CTT. And if we just maybe bring up, I'll see if I can find another announcement. Let's have a look. Let's have a look. Let's have a look. Let's have a look at this one right here. And so I think we can see here that there was 35 million shares sold for $1.35 each. This is from one of the big internal shareholders, so an insider at the company. Maybe this was a kind of a sign of things to come. $35 million 35 million shares at $1.35, still a massive share ownership in the company, but maybe that was a bit of a red flag for people a little while ago. So the company was up 12.5% today. However, it has fallen pretty heavily recently. So keep that in the back of your mind too. Robin, you've said the proposition is questionable. Luxury goods bought by the well-heeled, pun intended, why would they buy used bags and shoes? Well, it's kind of like a trusted place that you can go and you can get trusted goods and accessories, I guess. So that's probably the key there. BB, you've said, yet volume has increased over the year, over the last month, and it's off lows. Market psychology. Hey, yes, absolutely. Pocket Fuller said, is Cettire trying to corner the market with the ad spend? Seems secondhand luxury goods is the new black. Well, maybe. Nice few couple of puns in there, Shell. I like it. But yeah, I think the problem is with luxury items. I'm not in this marketplace, but the problem is trust. Are you getting a genuine garment, or are you getting a genuine accessory? That's always been the issue. Jeremy, you said it's all good, Owen. We've still got 43 minutes to wrap up the 2-hour live session, right? Yeah. So yeah, that's what Anthony said. I've seen the name via Fashion Lane, but never realized it was Australian. Yeah, so you can invest in it on the ASX. Okay, the last company, and the company that I have to be very careful about. This company is Dubber. So what does Dubber do? Dubber is a company that does call recording. So if you work for a big airline and it says, if you work in the call center, you might use Dubber technology. Or if you call up your favorite company and they say, your call may be recorded for quality and compliance purposes. You can view our privacy policy, blah, 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 blah. Well, there could be Dubber they're using. And so in the past, a lot of these servers and this computing power was stored separately, like it was stored in like a private server room or something like that, which was really expensive. And Dubber's come in with its technology and says, hey, we can do that in the cloud. So you can manage it from anywhere and you can get all of your insights. And they can do things like sentiment analysis. So one of the really interesting case studies from Dubber was that during coronavirus, a lot of airline customers were calling up, and they were calling up and complaining, demanding their money back, and so on and so forth, right, during the pandemic because they couldn't travel. And what actually Dubber realized by using its technology was that a lot of the customers, a lot of the staff for these, these companies were actually in a position where they were constantly dealing with negative sentiment from customers. Customers were annoyed and they were dealing with these calls every minute of every day. And at the end of the day, the staff of these big airlines may have been, pretty upset, pretty downbeat. So Dubber's technology could actually run sentiment analysis and could identify keywords and so on and so forth. And big customers are like banking institutions around the world and so on and so forth. So To set the scene for this result and why I think it was a bit of a doozy, and I did tweet about this on my Twitter handle at Owen Rask, and some of you may have seen that and know what's coming. The company came out with its results. Last time, I think they reported they didn't get their report out on time. But this time, you can see they've issued their report with the absolute minimum amount of information. So we can see here, it's got really, it doesn't have any like disclosures of management, incentives or payments and that sort of stuff. It's just the minimum that they have to do, basically. They've got another announcement, which I'll bring up in just a sec. But down the very bottom, we can see that the accounts are in the process of being audited or subject to review. So this is where an auditor has to go through the accounts and do their spot checks and make sure everything is what it is. And we can see that hasn't been done yet. Now, this by itself is not necessarily a massive issue, but I think you would want your company to have audited accounts before they're due to report their results. Because if they're not audited, then you're basically taking their word for it. So you want the accounts to be audited. There was some extra disclosure, which I'll get to in just a second. But if we go back and we look at the release, the kind of the highlights reel. By the way, whenever you see, and people will know this, whenever you see a company's set of results, typically what happens is there's this thing called a market release or like a media release. Then there's the investor presentation, which is what the company should go through with analysts on the call. And you typically find the link to the call down the bottom if there's one available. So they'll say, we are hosting an investor call. You can tune in on this link. And then finally, there's the investor presentation. Now, I don't actually know where the call was or if there even was a presentation. So maybe, I don't know where it is. I can see some questions have come through already. So Jason, you've asked, does Dubber do any AI sort of stuff to figure out common questions, etc.? Yeah, so that's one thing that they do, Jason, is they do AI, and that's their big push. So they do artificial intelligence. So for example, let's say, for example, you are in a Zoom call and you're recording the conversation. Well, there might be some artificial intelligence that's run on that information to try and extract things, for example. Anthony, you've said, I have worked in customer services. All customers are unhappy. Yeah. Yeah, indeed. Jeremy, you've said, Owen, it's clear in your voice there is a backstory you totally need to share with Dubber sharesies. So, yeah. And Rob's asked a question, by the way, did anyone win the free trades today? I don't think anyone guessed the correct names. Yeah, there is a bit of a backstory. I did recommend the company to our members. It fell a lot, and I was pretty upset with the company's explanations. And I sent off all of my questions to the management team through their IR, and they said they'd get back to me, and they never did. And I know for a fact that there were questions that were not answered on some investor calls that were I believe, is my opinion, they were deliberately not answered and not put to management on investor calls. And so when I see a company that doesn't do that, that doesn't answer all the hard questions, the hairs on my back and my neck stick up. Anyway, so what I was trying to get at before is, of these three announcements, of these three presentations, the one that I own, like the one that I pay attention to, is this one right here, the actual official report. The media release is typically designed to just help the company tell its story. The investor presentation is trying to fill in analysts. But if we go in here, what we can see from the company's presentation is that there is a substantial organic growth in all core business indicators. And that you can see that they've used a fair bit of language here to try and talk to you about different things and try and highlight different things. But let's have a look at the investor presentation. And in here, we can see some big numbers. So in here, see this thing right here? It says 75% of all conversations will be recorded by 2025. Well, I actually reached out to Gartner, which is the company that supposedly that does this presentation, I actually asked them, you say 75% of all conversations, how many conversations are recorded right now? And they really couldn't answer that question for me. So I was a bit surprised about that. And yet that's the kind of the leading thing. And if we come down, we can see here in the financial results, we can see the company is recording its operating costs, right? And it's trying to highlight this thing right here. But you can see the costs exclude something. There's an asterisk, and it says it excludes share-based compensation. So this is when employees get shares for nothing in this instance. And so we can see here that they say, oh, look at this, we've reported a loss of $46 million, right? But then you go to the actual report and you can see that they're excluding $20 million of share-based payments, $20 million. So that's an extra lot of money. That's almost as much as they made in revenue last year. They're excluding by saying, oh, no, don't worry about that thing. Let's just talk about this other stuff. And you can see here, I've done the calculations for you. They reported a $15.3 million increase in revenue, but around about a $47 million increase in costs. And so there are multiple red flags here. And I'll just give you one final thing, because I know I've spoken about this with you in the past, is using review websites. So typically what happens when you go to if you're trying to research a company, remember how I've said, look at the company's products, try and find reviews, try and speak with industry insiders. And here we've got a review website of the software, the Dubba software. And we can see there's 17 reviews. And as pointed out on Twitter when I spoke about this yesterday, you can see that there were 17 reviews. So if we go into it, we can see 17 reviews, 16 of them are 5-star, one of them is 1-star. But all of the reviews, in fact, every single one of these reviews came from the same month in 2021. You can see all of the reviews all at the same time. And for me, that hints to me as an analyst, as someone who's skeptical, that maybe, I'm not saying they're fake reviews, but what I'm saying is that maybe they were told to review the software rather than it actually being part of the normal process. And that leads me to believe that I don't really rely on those types of reviews. So Eve has got back to us, Rob, and said that Vaughan and I won. Fantastic. So great. Well done. Send us an email, Eve. Send us an email, Vaughan. It's marketing@selfwealth.com.au. And Anthony said, performance rights, not options. I'll get to that in just a sec. BB, you said, can you gild the lily, but in a less negative way? Seems like you can. Jason, paying someone, maybe. They need more cousins to review, says BB. They pay someone to do their reviews. Maybe, Mike. Not 100% sure, but maybe. Maybe there's an incentive. But what I would say, so if we come back to the company's report, and in particular its proper report, not the marketing glossy one, and I just think that this is the part where investors need to be careful. So in the notes here at the back, you can see that Dubba has a number of shares that are in circulation. This is just ordinary shares. But then it also has all of these different options. Options are a way to incentivize employees, to incentivize management teams, to directors, all that sort of stuff. But the thing that really gives me the irrits, the thing that really grinds my gears, is this one right here. This one, 0 exercise price options. And you can see 0 exercise price options, 0 exercise price options. Now, my understanding, 0 exercise price options, I think there's a legal review of this. 0 exercise price options are also known as share rights, as they can give rise to an entitlement to a share without paying an exercise price. Typically, they are granted free and therefore involve no cost to the recipient in acquiring shares. So now companies can give shares in a company as incentive structures, but I would say is that I would say that for me, so say for example, say my business, right? If I wanted to hire someone and they're really talented and I know that they could go elsewhere, sure, I might try and give them options. I'll say, hey, you can own part of the company, but the way you do it is you have to be employed for 3 years or 4 years or something like this. You don't get them for free, or if you do get them up front, you have to pay for them, because then it forces that employee to stick around and it forces them to put something at risk. And I just think that whenever you give away permanent capital, we call this permanent capital, which is part ownership of a company, for something that's not permanent, that raises red flags. So I don't really want to say too much more. Mike, you've said there is a company that will put likes on your YouTube channel. Anthony said, are they not relying on sticking around long enough? Well, it depends on the structure, Anthony, but if we look at the profit and loss and you see how much they're paying in share-based compensation, it's a huge amount. They're paying just in share-based compensation almost the same amount that they earned in revenue last year. Like it's just, by the way, a lot of their revenue is actually from acquisitions. And I actually tried to reach out to, there's this thing that happened in the UK. Dubber expanded into the UK by making an acquisition. And when they expanded into the UK and they bought that company was actually the combination of 2 other companies. And I actually tried to reach out to one of the founders of those companies and they never got back to me. And I just think, it was a bit, I just think it was really, really interesting. Pocket full of shot. Rob, really strange. I wasn't getting the chats Owen was calling out. So I opened up the live vid on the iPad, 2 different chats going with the same people on Android thread and was on the iPad. Mike says, pay me free trades and I will be liking videos all week. Anthony said, fair enough for a startup. Maybe for some startups, Anthony. Maybe for some startups. I don't know if you get to hundreds of millions of dollars in company valuation and I don't know. Maybe like if I put one thing that I always try and do, and I'll wrap this up in just a minute, but one of the things that I always try and do as an investor is and this is straight out of the Charlie Munger playbook, is I always try and understand my opposition's argument better than they do. So you can apply this theory in life. It's called inversion. And so if I think that Dubber's not a very good investment right now, let's take the opposite stance. Why would it be a good investment? So let's think about that. You could say, well, maybe the company is growing and all of those 540 or 520,000 users that they say are subscribers, but they don't disclose how much they actually pay. Maybe they are actually legitimate subscribers and they will start paying eventually. Maybe the company will stop making acquisitions and will focus on its organic growth. And maybe because of the massive sell-off that we've experienced and we've seen in Dubber shares, maybe now is a time when it turns around and it comes back up. Those are just the scenarios. And management, to their credit, have stuck around for a very long time, and they seem quite well versed in the industry. And the company's got cash in the bank for a massive capital raising. So maybe those things are positive. Whereas on the and then I kind of presented the negative case, but those are some of the positive arguments, and maybe I can just be completely wrong. The kind of the zero exercise price options, the ability to give options to someone that they don't have to pay for, is kind of just rubs me the wrong way. I just think, so Caroline said, just wondering, would anyone else like Owen to cover ACU? What's ACU, Caroline? I don't know what that is. ACU, Acumentus. Well, if you do want me to cover that, just let me know. So that brings us basically, so Raptor, you said you're on the Rash channel. Okay. So Rob probably can't see those comments, Raptor, unless you're on the Selfwealth channel. This goes out, this blasts everywhere. Pocket never happened to me before. Pocket Full, I didn't know there was a Rask versus Selfwealth thing going on. So what happens, Shell, is we just send this live. When we do the live every Wednesday, it goes everywhere. You can watch this on Facebook. You can watch it on Twitter. You can watch it on LinkedIn. You can watch it anywhere you get your social media. So some of the comments that I read out are on different channels. So Caroline, I'll put Acumentus on the list and I'll see if I can get to it. Martin has agreed and likes the look of it too. So I'll put that on my list. We've got a lot coming up over the next month. Don't forget to hit subscribe, by the way, guys. I've got my quote that I'll end on, which is a really good one. Don't forget, over the next month, I'm going to try and get some lithium experts on the show. I know that's what you want. So I've been on the phone, I've been emailing. So hopefully they get back to me in the next week or so. You're very welcome, Vaughan. Thank you. Great company reviews. Thank you very much. Rob and I put a lot of effort into the live show every week. So we really appreciate everyone's support. And for everyone that rocks up on a Wednesday night and has a bit of fun. Eat your minestrone or whatever you got in front of you, lasagna, something yummy. So yeah, it's great. But here is the quote for tonight. So this is a quote from the book Just Keep Buying. It's from Nick Majuli, and myself and Kate on the Australian Finance had the lovely. I guess we were very fortunate in being able to speak to Nick, because Nick's based in the US. And he's a data scientist. And he said, the data is clear that people are worried about how much they save. Unfortunately, the stress around not saving enough seems to be more harmful than the act itself. Then he quoted a study. This implies that saving more is only beneficial if you can do it in a stress-free way. Otherwise, you will more likely do yourself more harm than good. This is a fantastic book if you're into bringing some real life study and research to your thinking on investing. It's not just about personal finance where this quote comes from. It's a fantastic book, and it brings so many data points and helps you really think clearly about the world. Like, should I try and time the market? Should I try and trade stocks, or should I just buy an index fund? Or should I invest in bonds, or should I invest in stocks? Like, all of those questions are answered with proper data by Nick. And it's a fantastic book, really insightful for you if you want to go to the next level with your investing. It's fantastic. Titus, you said, it's my first time attending. I'll definitely be back. Thanks, Owen, for the great presentation. Well, Titus, if you like tonight's show, you probably would like last week's show as well. That was a fantastic one as well. Old Grousey says, ACU, Australian Catholic University. You know, I actually spent 6 months at Australian Catholic University here in Melbourne. And there's a bit of a fun fact. Pocket full of Shell. Thanks, Owen and Rob. Another informative session. Well, Shell, thank you. And Shell, I know, Rhea, you too. I know you both have been on every show for the last however long. You know, I say investing is a 3-year apprenticeship, but if you apply yourselves and you just attend the lives, or you just listen to a podcast or read some announcements inside Selfwealth, you know, every week or every, you know, day, if you want to put some time aside, I really think that 3-year apprenticeship is not 3 years. It can be, you know, 6 months, and you can really learn a lot about investing in a very short period of time. Pocket full of Shell has also added, Rob, and this is one that will add a bit of tension. Rob needs to level up the joke next week. It looks like you've been called out, Rob. You might be on the hook again. Okay, I've gone way over time, guys, and I really thank you for everything that you do to support Rob and I, for subscribing, for jumping on tonight's show, and always being so positive. It's a wonderful community. So thank you, everyone. We'll be back next week, next Wednesday. I've actually got some really interesting things that I want to bring to you as well, not just hopefully, you know, a few weeks of talking about lithium and speaking with some CEOs. If you have CEOs that you want us to interview, just write into us. I'm on Twitter, which is probably the easiest way to get in contact with me, or you can send us an email, or even just drop it in the comments after the show's done. So we'll get across that. So thank you, everyone. We'll be back next week, Wednesday, 6 p.m. Eastern time. If you're over in the Pilbara region of WA, we'll see you probably a little bit earlier than 6 p.m. But if you're here on the Eastern Seaboard, if you're south, north, wherever you are around the world, thank you for joining in. Thank you, Cameron, for jumping in on Facebook. I can see BB's just said CEO of Dubber. Wouldn't that be a fun chat? Okay, guys, have a wonderful night. Thank you for joining us, and we'll see you next time. And Suni Kim, thanks for joining us for your first one. I'll see you next